Thanks for joining us. I'm Marlon Bowling with you as we get ready to open up a new trading week here on our Market Day Report. Well, we are going to see what kind of reaction that we're going to get from the cattle on feed report that came out last Friday when we get into our next segment. Of course, that would be very interesting today as we sold off ahead of that report last week. On the grain side of things, interesting how we finished last week, and here to talk about maybe what to expect in this week's trade. It's going to be a holiday shortened trading week, of course, with Thanksgiving smack dab in the middle of it. We turn to Rich Nelson of Allendale Incorporated in McHenry, Illinois, and he joins us right now. So, Rich, when you have a week like this, what typically happens? Does the volume really thin out? Do the traders disappear? What happens?
You know, it certainly does. Usually we have some mild trade here Monday, Tuesday. Of course, we can expect Wednesday's trade to be quite a bit slow, and same thing here for Friday. Now, occasionally, in rare years and rare instances, we have had times, though, where we have had some pretty exciting Thanksgiving weeks if something moved. So, yes, normally low volume does mean low price movement. However, sometimes if we get an exciting enough story, maybe we'll get some extreme price movement in this type of odd type of trading week.
Let's take a look at our overnight trade here on the Globex market and see just how things did trade. Kind of a softer tone here overnight. It looks like December corn down one tick. 342 3/4 is the last trade in the early morning hours. We have the July down a penny at 370 1/4. And if you look at the soybean market, it had a little more weakness there. You have your January soybeans down 3 1/4 at 987 1/4, and July down 3 1/4 at 1016 1/4. I want to stop there for a moment. Rich, I have been hearing some stories here over the weekend about a little bit of concern about soybean weather in Argentina. What's with that?
You know, latest discussion now does show maybe some changes versus Friday's forecast. As it stands right now, week number one forecast is not going to be that dramatic. We will see maybe inch or so here for Cordoba, the top state. What's getting the trade discussing this forecast is the change for the 2-week total. Now throwing actually a bit more rain here than expected for that top state of Cordoba. Also, the number 2 state of Buenos Aires will see extra rain as well. So maybe some market movement at some point here based on this type of change here.
And you and I have been talking quite a bit here recently about what basis levels are doing on corn and soybeans around the Midwest. Can you tell what has happened in the past week?
You know, as far as the past week, we have seen some moderate changes in some select areas. As a reminder, though, with this rebound we had on Friday's trade, we're not going to see that much of a movement on cash grain because, of course, we'll make some moderate changes to the basis issue. So good to see some changes starting to happen in some select areas. As it stands, though, we're still trying to recover from these fall lows pretty well here.
Well, we have weakness in the Chicago and Kansas City wheat overnight. Let's take a look here. December Chicago wheat down 3 3/4 at 423 1/2. Kansas City wheat, we have that December contract down 3.5 cents. It's at 418 1/2. And on the Minneapolis spring wheat trade, here you have December down a penny 1/4 at 633 3/4. When you look at a chart on Chicago wheat, which is where most of the volume is, Rich, what does that tell you these days?
You know, as it stands right now, we can maybe perhaps argue that this longer-term downtrend might obviously be close to ending at some point here. One thing we can point out with the last week or so, though, is some more interest in at least finding some stability. Yes, we did go down in price here last week, but we at least haven't taken out some of the key areas on the charts. So not time to buy here in terms of an exciting issue, and the downtrend is still intact, but we are at least making some moderate changes to the charts here now.
All right, Rich, we'll bring you back here in a moment, and I want to get your thoughts on what to expect after that cattle on feed report that came out Friday. Might be surprised. We'll talk about it when we come back. Thank you so much for joining us on a Monday. I'm Marlon Bowling with you, joined by none other than Rich Nelson of Allendale Incorporated, and he is based in McHenry, Illinois. All right, the big news Friday as we headed home for the weekend after the markets closed up on the daytime session Friday was the release of USDA's cattle on feed report. And Rich, we have the numbers in case anybody missed it last week. This is what the trade is going to be focusing on today. And for the on-feed number, we had a total of 106% of a year ago. ago. As of the 1st of November, well, the trade was looking for 105.7. Now, the placements number, the trade expected to be 107.6. It came out at 110. So here again, as has been the case like all summer long and all fall, it was higher than the trade expected to see. However, I'll get to that in just a second. Marketing's at 106% of a year ago. The trade was looking for 105.4, so that was very close. All right, back to Rich Nelson of Allendale. And Rich, I know before the report came out, I was asking all of you folks at Allendale about what you thought about that placements number, and I believe you had the high guess, didn't you?
We sure did. So, for another time in a row, we have to discuss this idea of maybe a little larger placements going on than the trade was expecting. So now we got 113 and a half as far as the numbers for the September placements. So large there. Now for October, we're talking 10.2% over last year, and in fact, the largest October placement in 6 years. So cattle feeders have been very aggressive in putting numbers in the feedlots, and certainly from a cow-calf perspective, they're very happy to push them all the numbers they want with these very high feeder prices here.
The question is, we sold off the cattle complex for the most part for about 2 weeks ahead of that report. So now, even with the bearish placements number, is it all baked in?
I think in this case, you made a great discussion point earlier on, saying we've seen these before, and we've also seen the price reaction before. So I think we can say, yes, we'll have a lower trade here today off the start, but as we know from quite a bit of recent history, we probably won't trade this as being a major movement for the whole week. So yes, lower today, but likely if we trade like other ones, we might actually have a rebound by the time Friday rolls around here.
Yeah, wasn't it just last month when we had that large 113% number that it turned around and went like limit up the next day?
It certainly was, yes.
All right, so we'll have to be prepared for that. You never know, and there's a lot of investor money in there from the large commodity funds. And then you have a holiday right in the middle of our trading week, too. I mean, it could be very, very interesting this week. How about the hog trade? It's been kind of sleepy lately.
Exactly right. As far as the hog side, we've got still some problems here for this post-Thanksgiving Day period. Packers been running lower than expected kills here the past 3 to 4 weeks. So therefore, we're going to have a lot of numbers backed up waiting for us here in that post-Thanksgiving slaughter period. So we have maybe just another week or two of expecting pressure on the cash hog market, and then we can start to argue that the seasonal low is in, and maybe we can start to argue for higher prices in that first quarter.
Live basis hog prices, according to USDA nationwide, were a little bit higher on Friday. It looks like carcass basis hogs were down about 59 cents, so kind of a mixed impact right there. If you look at the cash cattle trade last Friday on the livestock summary, it looks like the market was basically roughly steady, maybe even a dollar firmer in some cases, but it didn't really go very far from where it had been previously, so hard to read too much into that as far as today's market activity. So with the markets on a short trading schedule here this week, do you think we're looking at thin volumes here in the livestock too then, Rich?
I've got to assume so, yes, and certainly on the hog side where we don't have the exciting cattle on feed report, I think we're going to have some pretty moderate volumes here pretty much every day of this week here.
Very good. Thank you, Rich. Appreciate it very much. Rich Nelson of Allendale Incorporated in McHenry, Illinois. So we're getting set to get rolling here on the daytime session. Found some interesting info on eggs.
Okay.
You may have noticed egg prices really skyrocketing at the store.
Yes.
Tell you why.
Okay. All right.
Coming up.
All right. Sounds good. Thank you very much, Marlon. Appreciate the insight.